You've probably heard it before. America doesn't even rely on Middle East oil anymore. So then, why do gas prices shoot up every time tensions flare in that region? It feels like a contradiction, a mystery or worse, a manipulation, but the truth is far more complex and far more revealing than most people realize. Cut to global map. Oil routes lighting up across continents. Narrator. Let's start with what's true. Yes. The United States produces a massive amount of oil, more than almost any country on Earth. In fact, thanks to shale and domestic drilling, it has significantly reduced direct dependence on Middle Eastern imports. So logically, events in places like the Persian Gulf shouldn't matter as much anymore, but here's where the story changes, because oil isn't just a local product. It's a global commodity. Music builds slightly, camera zooms out to show interconnected global markets. Narrator. Think of oil like gold or wheat, or even currency. No matter where it's produced, its price is set by a global market. That means a barrel of oil in Texas is priced alongside a barrel in Saudi Arabia. So when something shakes supply anywhere in the world, prices react everywhere. Cut to footage of tankers moving through narrow waterways. Narrator. And nowhere is more important to global oil flow than one narrow stretch of water, the Strait of Hormuz. Nearly 20% of the world's oil passes through this single choke point. Now imagine this. Tensions rise. Military threats increase. Shipping risks grow. Even if not a single drop of oil is blocked, the fear alone can send shockwaves through the market. Sound effect, heartbeat, tension. Narrator. Because markets don't just react to reality, they react to risk. And risk has a price. Cut to trading floor visuals. Numbers flashing. Narrator. Oil traders, investors, hedge funds, they all begin to anticipate disruption. What if supply drops tomorrow? What if shipping gets attacked? What if production slows? And suddenly, they start buying. Prices rise. Not because oil is gone, but because it might be. Scene shifts to American gas station again. Narrator. And here's where it hits home. Gas prices at your local station, they're directly tied to these global oil prices. Even if your fuel was refined from American oil, it's still priced based on the global benchmark. So when global oil goes up, your gas goes up. Simple as that. Pause. Softer music. Narrator. But that's only part of the story, because oil isn't just about supply. It's also about refining, transportation, and profit margins. Cut to refinery footage. Flames, machinery. Narrator. Crude oil has to be turned into gasoline. And that process happens in refineries, which have limited capacity. If refineries slow down, or shut down for maintenance, or face disruptions, gasoline supply tightens. Prices rise. Cut to trucks, pipelines, logistics chains. Narrator. Then comes transportation. Fuel has to move by pipeline, truck, or ship. Any bottleneck here? Any disruption? Prices climb again. Music shifts slightly darker. Narrator. And let's not ignore another powerful force: expectation. When companies expect higher costs, they often raise prices early. When consumers expect shortages, they rush to buy more. This creates a feedback loop, pushing prices even higher. Cut to quick montage. News anchors, social media panic, long gas lines. Narrator. Fear becomes fuel. And that fuel drives the market. Slow zoom into a single driver staring at the pump, total rising. Narrator. Softer tone. So when you stand there, watching the numbers climb, it's not just about where your oil came from. It's about a system, vast, interconnected, and sensitive. A system where a headline thousands of miles away can reach into your wallet within days. Music builds again. Hopeful but serious. Narrator. But there's something even deeper, something most people overlook. Cut to split screen. U.S. oil fields versus global markets. Narrator. Energy independence doesn't mean isolation. Even if a country produces all the oil it needs, it still operates within a global economy. Companies want to sell at the highest price possible, and global markets determine that price. So domestic oil doesn't stay cheap just because it's local. It follows the world. Pause. Let it sink in. Narrator. In other words, you're not just buying American gas, you're buying into a global system. Music softens, more reflective. Narrator. So the next time someone says, "Why are gas prices rising? We don't even use Middle East oil," you'll know the truth. It's not about dependence. It's about connection. Final montage, global map. All tankers, refineries, gas pumps. Narrator. Firm. Concluding, the world's energy markets are deeply intertwined. A disruption in one region, a rumor in another, a decision in a distant capital, they all ripple outward, and eventually, They reach you, closing scene, fade to black, narrator quiet, impactful, no Middle East oil, maybe but higher gas prices. That's the reality of a global world.